Let's now take a look at cyclicity. Cyclicity is the movement of the markets over a period of time. It is something that we see in upward trends, like this example here, and also in downward trends through here. When the market's moving sideways, however, the cyclicity will change from being in an upward trend to a downward trend, or it may be quite irregular cyclicity, or difficult to locate, difficult to find. As a result, cyclicity tends to be most obvious in a trending marketplace, and it's when you should actually use it to your advantage. Let's start off to begin with and just take a look at, from this low point down here, we can see the phase 1, which is moving up to the upside in the upward trend. Now phase 1 is moving in the direction of the trend. We can see this market overall is moving up, therefore this is a phase 1. We then got ourselves a phase 2, which is moving against the overall trend, which we can see this small phase 2 here is actually, roughly speaking, half the size of the phase 1. We now look at the next move to the upside, which we can see is a very large phase 1 move to the upside in the direction of the trend. We can then identify the phase 2 as the market pulls back against the overall trend direction. So we can see that we've got ourselves a phase 1, a phase 2, a huge phase 1, and then this phase 2 pullback. We then move back into the phase 1 again in the upward trend. And we can see how in a trending marketplace, at the end of phase 2 and the beginning of phase 1, that's when we're looking to get into the marketplace. In areas like this and areas like this. If we now have a look at the downward trend that ensues after this upward trend, we can see a very similar set of circumstances. We can see the move to the downside, the phase 1. We can then see the pullback being the phase 2. We can then see the long phase 1 through here, the small pullback of the phase 2, and the long move to the downside again back into phase 1. And we can see that the phase 1s are longer on the way down here than the phase 2s, and we can see that in this downward trend the phase 1s are moving down, the phase 2s are moving against that trend direction. The ideal locations for entries here, again at the end of phase 2, beginning of phase 1, areas such as where I've just marked there, and also here. That's where we'll use our price action signals a little bit later on in the course to identify the entries. Right now these are the zones as to where we want to buy and where we want to sell. Now we can identify in the upward trend the phase 1s and the phase 2s, and similarly in the downward trend the phase 1s and the phase 2s. But there's also this changing point, this tipping point, whereby it stopped being an upward trend and started to become a downward trend. Now, if we look at this in more detail, we can see phase 1 to the upside, phase 2. Phase 1 to the upside, and phase 2 pulls back. Phase 1 to the upside again, and the phase 2 pulls back. Everything's fine so far. Now, these turning points from phase 1 to phase 2, and from phase 2 back into phase 1 again, are called swing highs and swing lows, or swing points. This would be a swing high, a swing low, another swing high and a swing low, another swing high and a swing low. And we can see in an upward trend we have higher swing lows and higher swing highs. When this breaks down, we have the end of the trend, or the potential end of the trend. We can see here that throughout the red line that I've got drawn on so far, we've got higher highs and higher lows. That's higher swing highs and higher swing lows. We're happy we're in an upward trend. We've identified the phase 1s and the phase 2s, but it's around this area here now that we're going to start to run into some trouble. If we look at that in a bit more detail now, we can see that we have this move back up again that actually creates this lower high. Now when this happens, we were expecting this move to the upside to actually be a phase 1. That is, we're expecting the market to move up outside of this yellow box to the upside. However, that didn't happen. What actually happened was that we got a higher swing low and a higher swing high coming into the box. Then we had a lower swing high, and we can see that lower high there, followed by a lower swing low. And that's how we can identify the upward trend, the downward trend, and also perhaps where the yellow box is here, an area just to be aware of and perhaps stay out of the way. So in this upward trend, these arrows show where we'd like to enter the marketplace, again where we'd like to enter the marketplace, and the final part there is we would more than likely try to enter the marketplace somewhere around this third arrow. The fact is, the market moves to the upside, but actually fails to break that previous high. It creates a lower high, gives that shift in cyclicity, and it's that lower high, followed by this lower low, that tells us at this point in time, we've now got ourselves a change in trend. An upward trend will always have higher swing highs and higher swing lows. A downward trend will always have lower swing highs and lower swing lows. If we don't have either of those, we've actually got ourselves a sideways marketplace, and we just want to stay out the way until we get a clear trend direction. If we look at some more examples on this Euro-Yen daily chart, we'll start again at the lows through here. But we can see the move 1, the phase 2, the phase 1, the phase 2. We can then see this next phase 1 moving up to the upside again. Another phase 1. And we can see through here the market actually tends to go quite sideways next. This is just a very shallow retracement, but it's actually a phase 2. It's gone sideways, it's actually pulled back. We've got ourselves a phase 2 through here. Now bearing in mind we wouldn't know exactly where this turning point is going to be, there's other things such as moving averages that you can use to help you with that. We then get this next move to the upside, so we're still happy through all where these red lines are. We've got higher swing highs and higher swing lows. We're happy that we've got upward trend. And the potential trading opportunities, well, let's look at this. The potential trading opportunities, first of all, we need to look at this change in trend from down to up. Now, if we look at that change in trend, we see that we did have a strong move down through here. So we had ourselves a lower high and a lower low. So we still thought at this point here the market could go down. However, by the time we get the higher low and the higher high, the market's changed direction, and it's this point here that starts to give us our long entry signals. And again, through here. And as we keep plotting those now, we can see this quite deep phase 2, followed by the phase 1. Now this is interesting here because we actually get to a point whereby we have ourselves a higher low, so we would definitely be looking to buy through here because we have higher highs and higher lows. But we can then see that this move against the overall trend direction gives us a lower high. What this tells us is there's actually a moment of indecision right now. We have higher lows, seen here, and lower highs, which means we're actually forming a wedge shape, which we can see. We've got those lower highs there, we've got the higher lows through here. We're funneling into a wedge. We need to simply stay out of the way and wait for the trend to resume. However, entering the marketplace here on this third upwards arrow would still be a good entry signal. Price certainly moved nicely in our favour. You could have potentially made some money there, but you certainly never got stopped out of this trade for a loss because it was definitely moving to the upside overall. We then see this next move to the upside, which gives us this higher low and now the higher high. We then see the move pull back. This is quite interesting because if we look at this point in time here, we've got ourselves these higher lows moving up, and it's just a higher low through here. So this will be our next zone to look for an entry, and this is something that you'll look at more in the price action sections later on in the Learn Forex program. So we have higher highs and higher lows. We're still happy that this marketplace is moving up, and as we continue to plot these, we can see the obvious phase ones to the upside, and then the phase 2 pull back, before we then see price move again to the upside, again pull back, again move off to the upside, pull back, and we can see all the way through this strong upward trend, we've got ourselves these higher lows and these higher highs. What that means is through here, we would simply be looking to buy every single dip. Through here, and through here. And of course, that doesn't just stop there. We can see the next few examples through here, and there's the final one. And we can identify those opportunities in this upward trend. And we see, if we look at this, in this strong upward trend, there's been a lot of winning trades. And it's also highly likely that several of these trades have been big winning trades. That is, more than 2 or 3 to 1 reward to risk. Of course, that's something else we'll look at later on in the course, but for now you can see the cyclicity with these higher lows and these higher highs. And we see if we do get this indecision through here, we wait and do nothing, hence there's no arrow here, wait for price to resume its trend, or perhaps change the trend, and then we find ourselves the next set of entries into that trend. Now that you understand cyclicity a little bit more, spend some time just looking at daily and 4-hourly and perhaps even weekly charts, just getting used to spotting the cyclicity in the trending marketplaces, and also seeing that while markets do move to the upside and to the downside, they don't do it in a straight line. They sometimes have these periods of indecision that can actually slow you down, perhaps make you miss a trade or two, but at the same time, it's just staying safe and waiting for the next trading opportunity. I don't want you focusing too much on the change of trend at this point, much more on just the trends themselves. With regard to trading change of trend, that's something that you'll look at in the Pro Forex course, which shows you how to get into reversals at the end of the trend and catch tops and bottoms of markets.